Chip stocks, well, they're mixed this morning. AMD, Intel, and Qualcomm pulling back just a bit, but this comes after yesterday's rally. You can see Nvidia up another nearly 0.5% today, gained 8% yesterday. Some of that recent increased optimism surrounding the sector coming as CEOs in the industry tout strong demand.
The demand on it is so great, and everybody wants to be first, and everybody wants to be most, and everybody wants to be, and so the intensity is really quite extraordinary.
I believe this is a market that will grow to, $400 billion by 2027, which is huge. And it is an AI supercycle.
So let's talk about that outlook for chip demand here going forward. For that, we want to bring in John Vinh. He's KeyBanc Capital Markets equity research analyst. John, it's great to talk to you again. Let's start with Nvidia, given the massive move that we saw in the market yesterday, closing out with an 8% gain. Lots of optimism surrounding some of that commentary that we got from Jensen Huang. Anything in there surprise you, or is it pretty much of the same and just reassuring some of the skeptics out there on the street?
Yeah, I think this bounce that you saw in Nvidia yesterday was probably a recovery based on kind of an overreaction on earnings, right? Obviously, Nvidia just recently reported earnings that kind of met and exceeded street expectations, but they kind of missed some of the higher buy side expectations. So you saw a little bit of a pullback there. I think what really drove the recovery you're seeing more recently is that Oracle came out, talked about very strong accelerating growth on the AI side, and they also said that their outlook for next year is going to result in a doubling of capex. So I think that's reassuring investors that the AI trade is not over yet.
Is Oracle, in that sense, the best non-chip AI play in the market right now?
I don't cover Oracle. I cover the semiconductor. So I would just say that Oracle right now is one of the key important reads in terms of AI hyperscaler demand and spend going forward. Obviously they're off cycle, so they're giving us the most recent read on AI chip spend at this point.
I knew you'd had an extremely informed read in. I know you don't cover them, John. I just gotta, when we're on the topic, I gotta lob it into you and see what we come out with. But great insights as always. As we think about though, for chips, who is best positioned to really kind of catch some of the overflow that Nvidia is not able to handle for themselves?
I would say kind of three names that we would throw out. Right now we think it's such a expansive market. We heard Lisa Su talk about it being a $400 billion market by 2027. The three names I would kind of highlight would be an AMD, a Marvell, and a Broadcom, right? So AMD, you're going to be, we think they're going to be the lead second source alternative on the merchant side. Marvell and Broadcom are going to be focused more on AI hyperscaler custom ASIC development. Obviously Broadcom owns the Google TPU franchise there, and they've got a pretty strong position. Whereas Marvell, you're starting to see them get some good traction in the market with AWS.
John, when it comes to some of the maybe lesser known names, Cirrus Logic, I believe, is one of the names that you like when you talk about focusing on Gen AI and the further destocking process. Where do you see the value there?
Yeah, we like Cirrus Logic. They're kind of a proxy for Apple. 80% of their revenues is Apple driven. And if you look at the opportunity ahead for Cirrus Logic, right, there is potentially a replacement cycle if Apple starts to really get traction with Apple Intelligence there. So you can start to see unit growth. And on top of that, this is a company that has demonstrated content growth on pretty much every single new generation of iPhone. So on top of unit growth, you also have content growth, and that compounds, and it's kind of a proxy and a play on Apple.
So with that in mind, I mean, as we're waiting for some of, especially coming from Apple, waiting for some of these generative AI features to really hit critical mass coming through either via operating system updates or other consumer technology, where do we still need to see a lot of the industry be built out? Where are some of the gaps that still exist where investors would be apt to pay closest attention to?
Obviously, everybody saw the Apple launch event the other day, and, I think they made some progress. But I think if you take a step back, I think the industry is still waiting for that kind of killer kind of AI app. And I don't know if we really saw it the other day. So I think, you're definitely seeing some progress. But I think the broader market is still waiting to see what that killer application is going to be that's going to drive potentially a replacement cycle in AI handsets.
What does that mean for the future of the data center? We've heard Nvidia talk about this, the possibility for 1 million chip data centers in the future. Oracle has talked about needing a data center to be powered by nuclear reactors. So the data center itself seems to be set for a massive overhaul. How much more spending, though, do you think needs to come on the front end of that from some of the very companies that are looking to play in this AI space?
I think in the near term, we think spending is likely going to be unabated. Obviously the debate and controversy is, when are you going to start to see the monetization models for all this AI spend? And you really haven't seen it yet. You are obviously seeing some pretty good growth, but what we look at in our perspective, at least in the near to medium term, at least going into 2025, is that all these AI hyperscalers are going to have to aggressively spend. The next generation platform that Nvidia is releasing, Blackwell, is going to basically lower your TCO by 30x. So if we're still waiting for that monetization model, operationally, if you're a hyperscaler, you've got to go with the lowest cost TCO solution out there until you get that monetization model. So we don't see any sort of let up in spend over the next 12 months here.
John Vinh, who is the KeyBanc Capital Markets Equity Research Analyst. John, always a pleasure to get some of your insights. Thanks so much for joining us.
Thank you.